Learn how to create, sustain, and scale up your print-on-demand business with the latest tips, guides, and strategies to help you start selling and making money today. Welcome to the Sales on Demand Show. And here's your host, Adam Schneider.
Hey guys, welcome back to the Sales on Demand Show. This is episode 32, Building a Brand Part 3. I am recording on the road right now, but don't let that dissuade you from listening to this. It's still going to be a jam-packed episode, a lot to talk about. And the reason that I'm sort of recording on the road is because it's insanely busy right now for me. And I just can't seem to find half an hour uninterrupted to sit down, close the door of my office and actually record an episode. I have a lot to talk about and no time to actually talk about it. So what do? You multitask and you take time out of something else to record. So that's what I'm doing today. I'm actually at work, but it's really slow, so I have some time to do this. So just wanted to share some of the latest information with you guys. It is August the 15th right now, I think. Is it? Yeah, it's the 15th of August. It seems that at this time of year, you blink and 2 days pass. So that's fun. And then during the winter, it's like, man, that was a long 2-week, 24-hour period. So it is getting real close to crunch time. And by crunch time, I'm referring to kind of two things. For all of you parents out there, crunch time is the kids are going back to school. But crunch time for sellers is Q4. And you might think, oh man, it's still summer. Christmas is a long ways away, but I will tell you, Christmas is not that far away. If you want to have your stuff in stock, if you want to do well this Christmas, you've got to start planning right this second. I can no longer tell you that you've got a little bit of time. You've got to start right now. But the good news is that you do have a few months to sort of play around with your listings, add more listings, and try and get some traffic to those listings, and try and, if you're working with Amazon, you can try and figure out which listings are going to sell and try to get some stuff in stock with Amazon. For me, that is going to be my biggest struggle this year, is getting enough stock into Amazon to keep everything in stock. I have a number of listings that are starting to sell really well. And the struggle, of course, is once something starts selling really well, if you've only got like 20 or 30 of them in stock and it's selling 2 or 3 a day, you don't have a lot of time to sit there on your hands and wonder how much time. You got to send in stock, replacement stock right away. So for me, I'm playing a bit of a chess game. I'm looking, 2-3 months ahead to see what I think is going to sell really well and what I need to send in 4 or 5 boxes worth of stock for. So the good news for all of that is that Rachel Raffay's warehouse, and if you are new to the podcast, you don't know who Rachel Raffay is, she owns the site customhappy.com. It's the site that makes most of my coffee mugs. They're a very reliable supplier. They make excellent quality, and they ship out in boxes of 36. You get you don't get a discount, but it's about $4.95 per mug to get them printed, put into a box, and sent to Amazon. So that's what fulfillment by Amazon is. And Rachel Raffay is getting married to Don Wilson, who owns gearbubble.com. And I met both of them last year. It was almost exactly a year ago, maybe 10 months ago. But I saw them in Las Vegas. They're very good at what they do, and I'm hoping to see them again this year. Hopefully there will be another conference, and I'll be there if it is. If not, well, maybe I'll have to come up with something on my own for Canadian people. So if you live in the Calgary area, I'm looking to have a get-together at some point in September when the kids are back in school, and we'll just talk shop. We'll talk about business. We'll maybe do some hot seats for people, sit down and really analyze someone's business and see what they can do to improve their sales. So that's what's happening right now. Sales velocity is climbing. If you're a new seller, you might be thinking, that's all well and good for you, but sales velocity isn't climbing for me. Well, I hear you, bud. I was in the same position. This is my third Christmas time, and I'm rolling in. I know exactly what I'm looking at here. I know what's gonna happen this year for me, because I've been through this train several times before. I know which track it's on, and I know what my challenges are going to be. So I'm already thinking ahead how to fight off those challenges or overcome those challenges. And probably the biggest challenge is going to be just a lack of cash to buy more stock, because I expect to sell a bunch this year. FBA with Amazon always sells really, really well. And the fact that it's selling really well right now means that by the time Christmas hits, I could be looking at 100, 200, 300 sales per day, which means that I've got to have that stock sitting at Amazon by the time that hits. No easy task to do, but I am committed to doing it. Because, like I said, I want this to be my $100,000 Christmas. And, I'm going to make it happen. So the main topic that I want to get into today, I suppose I should share with you some things to look out for right now. Back to school. Start making back to school stuff right now. List it on Etsy. Etsy is where all trending stuff tends to pick up. Amazon, at least for me, tends to have some long-term, anything that's sort of evergreen will sell pretty well on Amazon. And it usually sells well with Fulfillment by Amazon. So I'm pretty much all Fulfillment by Amazon on Amazon. I very rarely get an actual print-on-demand sale these days, mostly because everything that has been selling for me on Amazon, I've already sent it there for stock. So anyway, Etsy is a place to look at for trends. If you want to capture some of that sweet, sweet back-to-school love, get your stuff up on Etsy and get it there right now, because if somebody orders it right now, it's probably not going to get there till the 1st of September. So don't wait. Back to school is 2 weeks away. So the main topic I want to talk about today is taxes. So last time I talked about sales taxes. So sales tax is when you go to the grocery store and you buy, I guess the grocery store is not a good example, because most of the time groceries are sales tax exempt. But when you buy, fast food, you're going to pay sales tax. And it's usually between 5 and, in some places, like 16%. So if you live in an area and your sales tax is 16%, I feel pity for you. You should move, because that's way too high. Paying 15% on every purchase you make is just straight up theft. That's basically another income tax right there. And you've already paid income tax on all that money. So, man, that's crazy. Here in Canada, it's 5%. And that's livable. So that was sales tax. And basically, I told you, I'll sum it up in this. Unless you're making about $100,000 a year in sales, you do not need to worry about sales tax. If you're making $100,000 just in Canada, or all from one province, one state, one of the U.S. states, then you probably will have some tax liability. So the best place to find that out is at taxjar.com. You can, I think if you sign up for the free program, that you can connect your Etsy and Amazon, and it'll actually analyze it and see if you actually are liable for any taxes. I haven't bothered to do that because I already know I'm not liable for any sales tax. And besides, I'm waiting for Amazon to basically be collecting all of the sales tax. That's what should be happening. And in many states, that is exactly what's happening. Amazon collects, Amazon sends it. I don't want to deal with that stuff. It's just a waste of my time and a waste of my money to worry about filing sales tax when I don't even live in the U.S. And just to be quite frank, if I didn't pay sales tax in the U.S., what are they going to do about it? I mean, if Kentucky wants my money, they can go to Amazon and demand that Amazon collect the tax, which they have. And that's why they're doing that. So, moving on to income tax. So, I'll discuss this from the point of view of two different scenarios. Most of you will fit into one scenario, some of you will fit into the other. So, the first scenario is you do not have a corporation. And you're just kind of a new seller, but you're making a few sales and you're spending a little bit of money on this, that, and everything else. You need to record all of your spending. What I see a lot of people doing, and I don't know why they do this, is that they start marking all their sales on a spreadsheet. And every time they get a sale, they'll go into their little spreadsheet and they'll record what they received, the fees that they recorded from that, and then what their profit is. Now that is fine if you've made 3 sales this week. That's probably not too much of a burden to do that, but I probably made 3 sales in the last hour, and you better believe that I am not going to sit down and record every sale on a spreadsheet. That is way too time consuming, and if you're doing that right now, then I guarantee you're wasting your time. You do not need to do that because Amazon and Etsy will do that for you. You can download reports that will tell you what your fees were month by month. You can do it quarter by quarter. You can create a custom block of time. You can say, I want to see the sales reports from January 1st, 2019 till March 31st, 2019. That's quarter 1. And you download that, and it'll tell you how many fees you paid, and it'll lay it all out for you. And you can just manually, you can add them all together with a spreadsheet. You don't have to sit there with a calculator and a tape ribbon. I mean, this isn't the 1890s where Charles Dickens has a room full of guys with quill pens writing things down. We have technology now that does all this for you. So one thing I do recommend, once you start making, say, over 10,000 sales in a year, $10,000 worth of sales in a year, or $20,000 worth of sales in a year, or close to that. Now, my very first year, I got 12,000, but I didn't buy any software to manage that because I was like, I don't need it. And the software that I'm going to be telling you about, it's not super cheap, but it's well worth it. And I'm talking about good old QuickBooks. So I have the online version of QuickBooks, and I got to tell you, I did not expect it to be so useful. So QuickBooks just automatically, because I've gone through QuickBooks, even though I still have my personal finances combined with my business finances, which again, I'm working on switching that over. QuickBooks is able to sift through and find all of the business expenses, record them. I can tell QuickBooks to split this, if I make a payment and some of it is shipping, and I know that some of it is shipping, I can tell QuickBooks, whenever you see this or this dollar amount, this much is shipping, this much is the actual product cost. Because when you're filing taxes, they want you to separate those two things out. So I won't get too deep and heavy into income tax and all this stuff. I'm going to hit the general points here. But if you've never done any kind of business before, here's what you need to know. Number 1, almost everything you do for your business is deductible. Okay? When somebody pays you $20 for that mug, you can deduct from your taxes. Technically speaking, that's income, right? Okay, that $20 that someone paid you, that's income. But it's different from your regular job. You are allowed to deduct what you paid to earn that $20. So you paid for the mug to be sent. So you paid $4.95 for the mug, $4.95 for shipping. If you shipped it somewhere else, then maybe it's a little bit more. Maybe it's $6.95 for international shipping. Whatever it is that you paid for it, that's a deductible cost. And that's the cost of goods sold. You'll hear me say that a few times. That's the cost of goods sold. Then you've got every month you're paying Amazon fees. Amazon has a $40 a month regular fee, plus they take a 15% referral fee, which is basically their cut, their profit margin for letting you sell on their platform. Yes, that's a pretty high fee, but it's also the best platform in the world, so they've earned it. So that 15% fee is a deduction that comes off of your profits. Then you've got your $40 a month. You just take that straight out of the bulk amount. Then you've got other expenses, and there's lots of expenses that you might not have thought of. For example, did you buy a computer at some point? If you upgraded your computer to run your business and you spend 50% of your time on that computer doing business stuff, well, the expense of that computer is a deductible expense. And this is why I recommend using QuickBooks, or if you're really no idea what you're doing, you might want to talk to an accountant. But honestly, if you're of average intelligence and you've done any kind of tax work, you know a little bit about math, you can do this on your own. It's not that difficult. I've been doing it for probably 12 years now, and it's not like it was really difficult 12 years ago and it became easier. I kind of figured it out in the first year, and now I just do it every year. So basically anything that you are specifically spending for your business is tax deductible. So let's say that you fly out for a conference, or let's say that you paid for some training. So you bought the low-hanging system, which I recommend, and a couple of you guys have bought it, and I am grateful for that because it helps defray the expenses of running this podcast. But that $300 is a deductible expense. You spent that money trying to earn more money, and you are allowed to deduct that. So last year I flew out to Las Vegas for a conference, and the purpose of the conference was learning how to sell better. So all of the expenses, including the airfare, the accommodation, the meals, the cost of the conference itself, which was it was included in something else that I bought, but I spent $3,000 on training. The conference was included in that. The whole thing is a deduction. So everything from the parking fee at the airport to the Lyft ride to get back to the airport. If you rented a car, that's a deductible expense. The whole thing is deductible from your overall profit. Now you got to remember that, if you're looking for these deductions, they have to be reasonable deductions. And in Canada and in the U.S., and I read up on this just to make sure I wasn't blowing smoke up your butts about what's allowed in the U.S., it's the same. Basically, any reasonable expense that you incur for the purpose of making profit. But there has to be a reasonable expectation of making a profit. You can't just be running what I call a horse ranch and expect to be able to deduct business expenses. So I'll explain what I mean by horse ranch. Farming is one of those funny things that basically anybody that lives in the country will sometimes call themselves a farmer. But there are a lot of people that run a business on a farm, but they're not actually profitable and they don't have any expectation of profit. So, if you own 35 acres, which is quite a bit of land for maybe like 6 or 7 horses, you could probably handle that. depending on where you are, and you're breeding horses and you sell one or two now and then, if the IRS or Canada Revenue comes and they audit you, they are going to very quickly see that this isn't a real business and you have no real expectation of profit. It's a hobby, right? It's called a hobby farm, and the number of deductions that you can make for that hobby farm are limited. So this is the situation that I was in for 10 years. I could only make limited numbers of deductions, but I was still able to make deductions. And I honestly was trying to earn a profit on the farm, and I kept all of my expenses, and I made sure I filed every year just to prove that I'm running a business. Now, with running an e-commerce business, I'm actually making money. Farming was fairly unprofitable. This is not. It's also a lot less work, too. So there's that. But I have proof that this is not just a hobby, that I actually expect to make a profit, and I'm deducting reasonable expenses, which include things like the cost of my internet, the cost of my cell phone bill, which includes the data that I use for business, because pretty much, I would say about 50% of my internet usage is business related. I have no hard data on that. That's just sort of my guesstimate, but that's a pretty reasonable guesstimate, and I've never been challenged on it. So I don't know if the IRS or your state income tax board or whatever commission is going to come and demand proof that half of your internet usage is business related, but they might. In Canada, I've never heard of them doing that. But if you are genuinely using half of your internet for business stuff, you could probably prove it by showing them the history. You'd be like, okay, these are all my business sites. Look how many business sites, Amazon.com, Etsy.com, Gearbubble.com, whatever. Whatever you're doing, you can easily prove that you're spending half your time doing business stuff. Now, here's something else that you might not have considered. Business use of home is a reasonable deduction to make. So I run my business out of my house. I have an office that is exclusively dedicated to business stuff. Yes, once in a while, I'll play a computer game in there, but it is, 90% devoted to business. And I have all of my business documents stored in there. It's my office. It's where I do all my work. It's where I do my recording. It's just my place of business. Now, that room covers about 63 square feet of the total area of my house. I think that's how much it is. I might be completely wrong on that. That sounds wrong. Anyway, that's a deductible expense. So all of the expenses that I incur renting my house, because I'm renting, including the heat, if I pay property taxes, the rent, whatever that bedroom, which is now my office, whatever percentage of the entire house that is, so it's probably 10%, I can deduct 10% of all of the expenses that I incur living in that house. And that's cool, because it helps defray costs that I would have otherwise had to actually pay for. So yeah, if you have an exclusive area that you could convert into an office, I would recommend doing that. Convert a small bedroom, a corner of your basement, make it into an office, put a filing cabinet there, put your computer desk there. I have a huge computer desk. It's pretty awesome. Lots of storage in it. And make that your business center. And then don't let your kids play on that computer, whatever. Just make that your business area. And then calculate, some area around that you need to walk around. And calculate how much of a percentage that is of your house. And if you're renting, then the entire rent counts. So how does this work? So if you rent, let's say that you rent an office building and it's exclusively an office building, you can claim the entire rental amount. However, if you are a mortgage person, if you bought a house and you're paying a mortgage, the only thing that you can deduct is the interest on the loan. So you cannot deduct, you can deduct it as a capital expense. Anyway, you need to talk to an accountant or look up the rules for that. It does differ depending on where you are. Usually you can't deduct something that you are permanently owning, like house or land. Things that you can deduct are using your vehicle. So for me, I don't use my vehicle very much to do this, so I don't have any vehicle expenses. When I was farming, there was a ton of vehicle expenses. So that was a complicated calculation. So I had to sit and figure out how many kilometers I drove and how much fuel it was using. And I had a little formula that I'd do for that. Now it's like, okay, I have all of the expenses. They're all in my bank account. It's really easy to do. The only expenses for driving that I had were driving to the airport for the conference last year in October. So that's pretty much taxes in a nutshell. I would encourage you to read up on it. If you want to do a Google search, I would type in business deductions plus your state and see what comes up. You'll probably find really good articles on it, and I couldn't possibly link you to any of the good ones because each state will have its own rules. And the IRS, of course, has its rules. But generally speaking, any reasonable expense that you actually incur while conducting a business is deductible from the profit of that business. Now, here's something that you probably don't know, is that you can if you spend more money on your business than you actually receive in profit, at least here in Canada, you can deduct that from your overall income. And you can get taxes back for having a loss. It's called a business loss. And I have had plenty of business losses. I did not have a business loss last year. Last year was the first year that I actually turned a profit. And this year I expect to turn a bigger profit, which is why I created a corporation, because otherwise I'm paying taxes on those profits based on my personal tax rate, which is somewhere north of probably 25%. I don't want to pay 25%. I want to pay like 10%. So I've created the corporation. The corporation is going to pay whatever the corporate rate is. If I want to take that money out now, then I do have to pay some tax on it. It differs based on various factors. That gets complicated. I can leave the money in there, though, and reinvest it, which is precisely what I plan to do. And when you reinvest money, you can build that money and not really pay much tax on it. You just pay the corporate tax rate, which is usually pretty low, because here in Canada, I think it's like 2 or 3%. It's something really crazy low. But you can let that money grow and grow and grow. And then later on, if you decide, hey, I want to quit my job and work for my company, which has a bunch of cash in the bank, then you can just pay yourself, a small salary, whatever covers your expenses. You'll pay your personal income tax on that. And you still get to, run the business and make good money, but you don't have to realize taxes on that right away. So if I've completely confused you, don't worry about it. Just start making some sales. Worry about the taxes later. I'm serious, guys. If you don't file taxes for this year and you only made a couple $1,000s, you can always lump it in and file 2 years in a row next year or something like that. Generally speaking, that's not a big deal as long as you eventually file those taxes. The government is not sorting through your bank account to see what all these expenses are. It's generally up to us to tell the government, hey, I'm running a business. These are my expenses. This is what I earned this year. This is what I lost, or this is what I paid this year. When the government sees that you're doing that, then they'll start taking notice. If you stop doing that, maybe, they'll be like, hey, did you stop running this business or something like that? But to be honest with you, they're not looking at small fish like us. At least the Canadian government isn't. I've never been audited. Not once. I have had Canada Revenue ask me for specific documents for big deductions that I wanted to take, which I happily provided. And generally speaking, I've found that Canada Revenue is actually pretty good. They've gotten a lot better over the last few years, which is remarkable because they used to be terrible. There's still some problems, but I mean, generally they're, maybe 5 years behind the private sector in terms of technology. So that's just how government works. When the private sector discovers something great, 5 years later, the government's like, oh, sweet, we should start using this. All right, guys, that's it. That's it for the summer, pretty much, from me. Might be one more episode. Sorry about that. Radio went off there. So there might be one more episode just before the end of August, but that's pretty much it. I'm going into the mountains for 10 days to find myself and commune with dirt. No, I'm kidding. It's just a summer camp. This is vacation part 2 for me. So my advice to you guys is try to get in a little bit of outdoor time, but also sit down at your computer and start doing some business stuff. And start thinking about how you can build your brand. Start making it more of a legitimate business instead of a hobby where you make a couple of dollars every now and then. Because there is so much potential in this business. So much potential. I have a lot of friends who are selling these multi-level marketing products like Young Living or these essential oils or keto coffee, and all I can think of is, well, once you irritate all your friends with sales pitches, how do you scale that up? And the answer is you can't. But when you're selling print on demand online, you have literally the entire planet, or at least most of the planet, the part that actually buys, gifts for their families. You've basically got everybody as a potential customer. You don't have to worry that there's some kind of limit. You don't have to sit there and try to make a sale. I mean, once things start rolling with this kind of business, it can really get big. So, we'll talk to you guys soon. Have a great rest of your summer. Cheers.